What's up, you guys, and welcome to the video. Today we're covering my top 3 favorite ETFs to buy and hold for the long term. Disclaimer, I own all 3 of these ETFs in my personal portfolio. I hope that displays the confidence that I have in these, that I'm willing to park my nest egg into these funds for the long haul. We'll be covering a staple US fund that I think many investors should consider holding in their portfolio. We'll cover a globally diversified product for those looking for exposure beyond the American market. And we'll finish off with a contrarian or possibly controversial pick that, if your risk appetite suits it, may be a good one to consider. If you're new to the channel, give this one a thumbs up, subscribe, follow me on my socials, and let's dive in. First up, it's of course the S&P 500 ETF. I'm looking here at the Vanguard ticker VOO, which I own. VOO tracks the S&P 500, which means it owns a basket of the 500 largest companies in America. Think Apple, Nvidia, Microsoft, Tesla, and so on. Broad exposure to the largest companies in the US. This is a product that gives you diversification across all the major sectors, predominantly weighted to tech at the moment. We'll touch on this a little bit more as we dive deeper into the video, but the expense ratio on this, the cost that you'll pay to invest in this fund, is as cheap as they come, just a few basis points. And historically, the S&P 500 has returned around 10% per year on average over the long haul. Now, this to me is the core or foundation of my portfolio. In fact, in my situation, it represents about half of my account. Key point I want to bring up is that VOO in and of itself is an American listed and American traded ETF. I'll pop up on the screen a number of other options that you may want to consider if you're a Canadian investor. The reason why I've chosen VOO for myself was when I set up my registered retirement savings plan, the RRSP, I had a bunch of US dollars when I made the transfer over, so I didn't have to worry about currency conversions. And technically speaking, US listed ETFs such as VOO do house pretty well in the RRSP. Again, what you're looking at up on the screen would all be suitable options. These would all get you exposure to the 500 largest companies in America. Number 2, let's talk about ticker ZEQT, the BMO All-Equity ETF portfolio. This is what's considered an all-in-one ETF, which is super diversified. It does give you US exposure, but as well exposure to Canada, international markets, emerging markets, and more, all inside one single ETF. Here's the rough breakdown on the screen as of today. What's awesome about this fund is that it automatically rebalances for you. You're getting exposure to companies all over the globe, and you don't have to do much at all. There's a pressing question I've been getting asked a lot recently about whether I feel comfortable investing solely into the S&P 500, given that the top of this index is heavily skewed towards tech, the Magnificent Seven stocks, AI, while a fund like this somewhat acts as a hedge. Maybe that's not the right term, but it does help me spread my chips across the different areas of the world, so I'm not fully banking on the US market. Of course, as the name implies, this is an all equity ETF, meaning that it's 100% exposed to stocks and equities. For someone like myself with a time horizon of over 30 years to go in the markets, that's where I want my money to be exposed to. The management expense ratio, or the fee that I'll pay annually on this, today sits at 20 basis points. This makes up roughly a third of my personal portfolio. And last but not least, we'll finish with the controversial one on the list. As always, guys, you do your own research and due diligence to decide if these are funds that you should consider for yourself, but it's the ticker MCHI, or the iShares MSCI China ETF. Now, the Chinese market is one that I'm well aware of has struggled over the past few years. They've been dealing with slower growth, constant regulatory and geopolitical crackdowns and issues, and in general, investors tend to have a negative sentiment towards this market. Now, in lieu of that, in my personal opinion, that may also be offering us up an opportunity to invest in companies like Alibaba and Tencent, which have shown strong performance as of recently. While MCHI as an ETF gives me exposure to these companies, as you can see, with a heavier skew to the 2 companies mentioned, essentially the biggest players that you'll find in the Chinese market. In general, I believe that the Chinese economy is on a strong trajectory, currently sitting at the 2nd largest economy in the world, following the US. As an investor such as myself who's comfortable with the volatility and the risk associated with a fund like this is a market that I do want to be exposed to. And I'll bring it back to our previous fund that I covered, ZEQT, which you'll note only has about a 2.5 or 2.6% weighting to the Chinese market. Hence why, if you believe in a similar thesis to me, I think a fund like this could be a nice complement to the other 2 that we've talked about today. In my personal portfolio, I have a rather aggressive weighting with about 12% allocated to this fund. This one, FYI, is a US listed ETF, similar to VOO covered previously, and trades with the expense ratio of 59 basis points. In summary, the reason why these 3 ETFs are my personal favorites, do your own research and your own due diligence, is because I feel these cover the full picture of what I'm personally looking for as an investor. I have the S&P 500 fund as my core US exposure. I complement that with the globally diversified ZEQT, giving me exposure to markets beyond just the US. And due to my personal belief on the future of the Chinese market, MCHI is the more contrarian, high-risk solution that I've decided works for me. A couple honorable mentions not included on our list today that I think may be worth the consideration for your own portfolio is considering a bit of exposure to cryptocurrency like Bitcoin, as well as some direct exposure to gold. More on that in a future video. As always, feel free to let me know what you think down in the comment section below. Whether you agree, disagree, it's all welcome. I'm just sharing with you what my personal favorite ETFs are at the moment. Always do your own research and due diligence. Once again, you can follow me on my socials here. And as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.